And as President Trump has directed, we are going to keep the U.S. the dominant reserve currency in the world, and we will use stablecoins to do that.
Who knows, maybe we'll pay off our $35 trillion, hand them a little crypto check, right? We'll hand them a little Bitcoin and wipe out our $35 trillion.
Here we are now, what, 150?
I think the 200 to 250,000 for Bitcoin still makes sense because that would still only value it at 25% of the size of the gold market.
Okay.
So I think digital gold means Bitcoin should be worth over $1 million per Bitcoin, and it could happen in the next few years. But maybe pricing 25% of that, especially with Genius Act, makes sense.
Are you going to, I don't know, start making comments and recommendations about stablecoins?
Yes. I mean, in a sense, stablecoins are the ChatGPT moment for crypto because businesses like it and consumers are adopting it. And now we see JP Morgan and Citi and getting into the stablecoin market, and the Genius Act, of course.
How would you play that?
Well, Circle is one way because it is, a standout company. They've done really well. But Ethereum is really the way to play stablecoins because the majority of stablecoins are created on Ethereum. It's over 30% of its network fees. And if Scott Bessent's right in it, he says now it's close to a $4 trillion market. That's exponential growth for Ethereum.
Ether has taken off recently. It was down at 1,700 or something like a month ago or 2 months ago.
Yes.
Now it's back almost, 36 or something?
That's right. And I know Mark Newton, our head of technicals, thinks it's 5,000 is doable near term, but if you value it similar to Circle, it's more between 10 and 20,000.
You give a rat's patootie about August 1st? Does anything change with that for you?
A
new month.
Yes.
That's your answer? Well, it's a new month. Yeah.
I mean, I think that on the half full, the tariffs are really good for the budget. So, and companies are managing through these now, and they're pretty significant now. And it's not inflation. They're not talking about it as inflation. So that's the half full. But you're right. Maybe August 1st gets pushed again, and that would also be positive.
Well, we're already innovating in several places in the world on moving money and settling. So both in South America and in Africa, we are innovating our settlement processes to move money quicker and to more easily convert into local currency in partnerships with some of the infrastructure companies you've had on this show. So we are also exploring other partnerships with people who want on-ramps and off-ramps in different parts of the world on how we could enable Western Union's funds in and funds out to enable people to purchase and sell stablecoins. Finally, we're investigating how we might offer stablecoin products in our digital wallets to our customers around the world, again, in partnerships with many of the companies that you've talked to over the course of the last couple of weeks.
The Genius Act is focused on payment stablecoins, and so that's not really within the SEC's ambit of regulation, but it's really for the banking regulators, as is appropriate. But the one great thing about this is that for the first time now, the United States government has put its stamp of approval on a very key and important, potentially very important digital asset that will, I think, help to lower costs, lower risks in the market, because we can now move towards an instantaneous almost settlement of payment versus delivery for securities thanks to on-chain stablecoins. And that will help, I think, innovation and to really get our markets, to be the best in the world.
Basically all transactions at what might be described as T0.
Yeah, well, potentially that's where we're going. Now, there are a lot of things that need to be worked out, and of course, to have some ability there to prevent fraud and in the marketplace, with respect to instantaneous settlement. Those things can be worked out as the marketplace adapts to that potential. But we've seen, and as far as now we're at T+1 settlement, and so of course, again, it's almost instantaneous. Delivery versus payment is something that people have dreamt about for many, many decades now.
Question revolves around liquidity, which is to say that private investments historically have not been liquid. There is this sort of effort to create these semi-liquid instruments. We've talked about BREIT being probably the biggest of them. It's a real estate investment fund, effectively, that's run by Blackstone. has a semi-liquid piece of it. There was a period of time where it wasn't actually as liquid as it should be. My question is, if you're 20 or 25 years old and you get to own something for 20 or 30 years, you don't need it to be liquid. But by the time you get to retirement, boy, do you need that liquidity. And so if you get to a period of time where, for whatever reason, things aren't liquid, what do? And you create this almost secondary or tertiary market where people are basically liquidating different investments to create that liquidity. Is that a good or bad thing?
Yeah, well, I think that's a good point, and all these issues need to be worked out. And so the one thing, if there are various types of funds, some geared for investors to hit their retirement age or to plan for the future according to various decades of their lives, and then to be able to pass down some of these assets perhaps to the next generation. So through those, working, I think, with the people in the marketplace as they develop ideas for other sorts of funds to come forth, I think they will answer that demand in the marketplace to help solve that liquidity issue. But that is one of the key things. So obviously, you should not invest in a private equity fund just for overnight or short term type of investment. It's much more of a longer time, and then hopefully it pans out. So, but diversification is key, and that's one thing I think in the retail markets, between diversification and addressing fees and addressing the liquidity issues, we will be able to work that.
Welcome to the Crypto Teacher. Don't forget to like and subscribe to the channel. And make sure you join the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. Also, go like and follow the TikTok. More videos to come. And we have Tom Lee making more predictions. And we know we follow the Fed, but he says maybe 250 at the end of this year and 1 million in a few years. And the way to play these stable coins is Ethereum. But we have to watch Scott Bessent and the Fed and see when they're going to flip the switch. And they're definitely not going to give us a heads up. And then Tom Lee talks about tariffs. And tariffs will cause inflation. Don't let the mainstream media tell you otherwise. The fact is, somebody has to pay. The only reason why we're not paying a lot right now because the corporations front ran the tariffs. We know this. But on the back half and going into next year, pricing is going to increase. Pricing is already increasing, but we're going to have bigger increases. Now, if Trump pushes back the tariffs and we don't get a rate cut, we're still going to have a pullback in markets. It just won't be as big. But if he decides to slap these tariffs on, and then on top of it, going towards the end of the year, we have to refinance $10 trillion. And on top of it, the Fed not cutting rates, then we know markets are going to take a good dump. And remember, the Crypto Teacher told you. And we have Western Union, speaking of Africa and the emerging markets, being the on and off ramps for stable coins. And again, we know these big banks, Western Union, MoneyGram, doesn't matter, Visa, MasterCard, they've been in crypto from the beginning. They've been partnering with these big crypto projects. So we know they're ready to flip the switch. And remember, the Crypto Teacher told you. And we have Paul Atkins on stable coins are able to lower the risk and real-time settlement. And remember, it's not just stable coins, it's blockchain that makes it all happen, freeing up hundreds of trillions of dollars of liquidity. And we have Ethereum, and these smart contracts allow you to program money where you can pay out dividends at a certain time, whether you can buy a good or not, or even allowing money to expire. We are in this space, so we understand the technology. We know this is definitely biblical, but the sheep have no clue. And in the mainstream media, they make it seem like Visa, MasterCard, or Swift is going to be replaced. And we know that is definitely not true. They've also updated their rails, and they also have their own technology. And then on top of it, we know Swift teamed up with Chainlink where they can bring all these blockchains together that gives them the all-seeing eye. So they know you better than you know yourself. And remember, the crypto teacher told you. And we have yellow card in Africa, moving stable coins, going over that in the emerging markets, the infrastructure wasn't there. And you guys know I've done plenty of videos on that. It was easier for them to put all this technology in the emerging markets because they didn't have a foundation. This is their foundation. All this technology, the machine takeover. But when we look at Africa, they were already using different forms of digital technology. So crypto, fintech definitely went running wild. But it's crazy that we see these American kids over in Africa creating $1 billion business and now allowing the natives to do it themselves. Don't forget, it's always a hidden hand. And remember, the crypto teacher told you. And then we have Elon Musk XAI making an app for kids. And guys, we know this is nothing but a setup for the metaverse, programming the next generation. And we see ChatGPT is already having an effect mentally on adults already. It's not even that old. So just imagine the effect that it's going to have on kids. Look what social media did to the kids. They live in an illusion. And in the metaverse, they want them to live in it permanently, where your life is a real life video game. And remember, the crypto teacher told you, because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
We're seeing product market fit with stablecoins. Right. So the majority of stablecoins are being generated on top of Ethereum, and Ethereum is able to embed any type of digital asset, a bar of gold, a barrel of oil, a stock, a bond, a derivative, and then embed those into digital legal agreements. And in doing so, you're able to expedite the velocity of money. You can have employment contracts that get paid by the minute, as an example. Why would somebody invest in and buy shares in this company, which effectively could be like a micro, could I call this a micro strategy for Ethereum? I don't know if that's a fair way to, but why would I buy this company as opposed to just going off and buying Ethereum? Great question. MicroStrategy is a buy and hold because Bitcoin doesn't have intrinsic yield to it. Ether is a productive asset, so we can generate yield by staking and participating in the decentralized financial economy. For those who don't know what staking is, just explain it to the audience. Staking is generating yield by securing the network and processing transactions. So in Bitcoin, you have proof of work mining, where you have hardware, real estate, and electricity that you have to spend. Ethereum doesn't need any of the hardware, real estate, and electricity, and does it much more efficiently through proof of stake. And we can generate yield intrinsically within Ether. And so, again, though, go back to I could go buy some Ethereum on Coinbase if I wanted to, or I could buy shares in this new venture. So if one were to purchase Ether, that would be like having a stock, but or the ETF right now, without access to the dividend. Ether produces yield if it's properly managed. And that's what you call the Ether machine. Yes. And so the ETFs right now don't generate yield because they don't enable staking. And we're able to enable staking, and we're able to do other additional risk management on top of that. There has been some Larry Fink or others that you might start to see ETFs that actually can do some of the things you're talking about. So we believe that they will eventually be able to enable staking, but we don't think that they'll be able to stake at full capacity. Mm-hmm. And then furthermore, they're not going to be able to participate in the active management of the decentralized financial economy. So this is Ethereum staking plus participation in the DeFi economy. So you're an Ethereum guy. Do you own Bitcoin? I'm not. I do not own Bitcoin. None. I'd rather have an iPhone than a landline.
This is a new paradigm for how money is going to be moved writ large. I think, for the last 50 years or so, we've been using SWIFT as the main infrastructure for how money gets transferred. I think that ultimately, over time, that's going to be replaced. You now have more secure, less expensive, faster rails that people are going to play with in all different kinds of ways. And quite frankly, I don't know what the sort of like what the winners and losers are going to look like, but I know that we see a groundswell of early stage founders who are very excited about this. And I think you're going to see a lot of movement in this industry. But this is sort of a mainstream moment for crypto, where now you see fintech and crypto coming together in ways that have not necessarily been the case, because crypto was always this sort of like unregulated, Wild West. And now that you have real legislation coming into play, I think that you're going to see the worlds come together. They did actually sort of track along the same lines back in the Xrp 21 era, where you saw tons of money pouring into both fintech and crypto simultaneously. They, in some ways, went through a similar winter over the last few years, but now you're going to see the two sort of intermingle. And this legislation in particular, I think, is going to show it's going to bring the big banks into this space in really serious ways. And so companies that have been laying infrastructure, like a company in our portfolio called Blockdaemon, I think are going to now, after sort of building great product and getting ready for really hitting the market, you're now going to start to see big banks get in on the action.
In 2017, right? So at the time it was Bitcoin, and hey, Bitcoin, it's free, it's instant, it's fun, all this great stuff. And the more that we started thinking about it, it's what would this guy's mom do with $200 in Bitcoin?
Yeah.
Right? You can send it around the world, but then how are you actually going to transact with it?
Yeah.
Right? And so, now with stablecoins, there's just a new way of actually being able to interact with the dollar, the world's global reserve currency that we're all using on a daily basis.
It's interesting too, because we mentioned that, of course, you're the largest one in Africa, licensed one in Africa right now. And we've seen, particularly in the fintech space, we've seen a lot of the countries in Africa, particularly in the sub-Saharan countries, really sort of embrace fintech in a way that here in the U.S. we were maybe a little bit late, relatively speaking. Was the need there because of the transaction costs? Was it because of transparency? What was the real need?
Yeah, I think when you look broadly across the continent, you're talking about, essentially, what was a blank slate, right, before fintech.
Yeah.
You didn't have as much of, incumbent infrastructure as you did in, the U.S. and Europe and other parts of the world. And so, fintech was able to really take the continent by storm. And now that's transferring over to crypto, right, and to stablecoins specifically. A lot of the, traditional rails, especially for U.S. dollars, just don't work, right?
Yeah.
The intermediary bank system and, SWIFT and these systems were not set up for emerging markets.
Yeah.
They were set up for the U.S., right? They're not a benefit to anybody else in the world. And so, now you have this technology with stablecoins that's just fundamentally changing the way that people interact with the dollar.
Yeah.
It's changing the way that businesses around the world interact with the dollar. And it enables them to be able to move that money outside of the intermediary system, right? Without having to ask New York for permission to move that money.
Over the weekend that XAI, his company, will make an app designed for kids called Baby Grok. It comes after launching 2 so-called AI companions, or kind of animated AI characters that users can interact with. Joining us to discuss this trend is CNBC contributor Michal Lebrom out in San Francisco for today's Tech Check. Michal, it's great to have you. Welcome aboard.
Nice to be here.
I don't know whether to start with sort of an AI chatbot that's safe for kids, or these companions, which sound a little creepy, but I acknowledge are kind of the future of where this is going.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still